Saving money will not save you. Welcome to Be a Baby Billionaire. As we all know, no one has ever saved their way to becoming wealthy. Yet the media and the so-called experts tell us to do so. In the process, they may be enriching themselves by propagating the concept of saving while you are picking pennies. Do you know of anyone who has saved their entire lives and is wealthy today? That may be highly unlikely. Let's look into the logic of saving. In reality, you can only save so much. Opening a savings account in a bank may give you a mere 0.01% in interest, while the inflation may be running at 6%. But when it comes to income, the sky is the limit. By creating multiple streams of income, you are not only depending on just a job, but you are creating your future. Saving is always reserved for the poor because the rich do not save, but they invest. They are not consumers, but producers. Today, we're delving deep into a topic that's at the core of financial stability: saving money. So, buckle up as we embark on this enlightening journey into the complexities of personal finance. Danger in saving. 1. Inflation erosion. Imagine diligently socking away your hard-earned dollars into a savings account, only to find their value slowly but surely dwindling away over time. This phenomenon is none other than inflation erosion, where the purchasing power of your savings diminishes as the cost of goods and services rises. It's akin to trying to fill a leaky bucket. No matter how much you save, the constant drip of inflation steadily erodes your financial security. Without exploring avenues like investments or inflation-adjusted accounts, your savings could be akin to treading water in a sea of economic shifts. Danger in saving. 2. Opportunity cost. Saving money is undeniably a prudent habit, but what if I told you that playing it safe might actually be holding you back? While your money sits idle in a traditional savings account, opportunities for growth and financial expansion might be passing you by. This is the concept of opportunity cost in action. The potential benefits foregone by choosing one alternative over another. By remaining fixated solely on saving, you could be missing out on investments, entrepreneurial ventures, or even further education that could exponentially increase your wealth over time. It's time to think beyond the confines of saving and start considering the broader spectrum of financial opportunities available. Danger in saving. 3. Emergency expenses. Life has a way of throwing curveballs when we least expect them, and having a healthy savings cushion is often touted as the ultimate safety net. However, there are times when even the most robust savings can't shield us from the financial fallout of unforeseen emergencies. Whether it's a sudden medical crisis, a major home repair, or a car breakdown, these unexpected expenses can wreak havoc on our finances. While saving money is undoubtedly a crucial aspect of financial planning, it's equally important to have a dedicated emergency fund and robust insurance coverage to weather the storm when life throws us a curveball. After all, preparation is key to navigating life's unpredictable twists and turns. Danger in saving. 4. Job loss and income instability. Now let's consider the unsettling reality of job loss or income instability. Saving money diligently might seem like the ultimate safety net against such uncertainties, but the truth is, it may not be enough to weather the storm. In today's dynamic job market, where layoffs and economic downturns are all too common, relying solely on savings to tide you over during periods of unemployment can be a risky gamble. Without alternative income streams, a robust emergency fund, or perhaps even a side hustle, your savings may dwindle faster than anticipated, leaving you vulnerable to financial strain and stress. Danger in saving. 5. Burden of debt. While saving money is a prudent financial habit, it may not be the most effective strategy if you're burdened by high-interest debt. Consider this. You diligently save a portion of your income each month, all while carrying significant credit card debt, accruing sky-high interest rates. In this scenario, the interest payments on your debt could easily outpace any interest earned on your savings, ultimately costing you more in the long run. Instead of focusing solely on saving, it's essential to prioritize debt repayment. particularly high-interest debts, to free yourself from the burdensome cycle of debt and pave the way for a more secure financial future. Danger in saving 6. Healthcare costs and insurance gaps. Even the healthiest among us aren't immune to the financial strain of healthcare costs. While saving money can certainly help cover medical expenses, it may not be sufficient to mitigate the full brunt of healthcare-related financial burdens. From routine medical bills to unforeseen emergencies, the costs associated with healthcare can quickly escalate, leaving even the most diligent savers struggling to keep up. Moreover, gaps in insurance coverage or high deductibles can further exacerbate the financial strain, making it essential to have a comprehensive understanding of your healthcare needs and adequate insurance coverage to protect against unforeseen medical expenses. Danger in saving 7. Retirement planning challenges. Retirement planning is a marathon, not a sprint, and simply saving money won't necessarily guarantee a comfortable retirement. As life expectancy increases and pension plans become less common, the onus is increasingly on individuals to fund their golden years. While saving diligently is a crucial aspect of retirement planning, it's just one piece of the puzzle. Factors such as inflation, rising healthcare costs, and the need for long-term care must also be taken into account. Without a comprehensive retirement strategy that includes investments, retirement accounts, and perhaps even supplemental income streams, your savings alone may not be sufficient to sustain you throughout your retirement years. Danger in saving 8. Market volatility and investment risks. Investing is often touted as the key to building wealth and achieving financial freedom, but it comes with its own set of risks. While saving money provides a sense of security, investments are subject to market volatility and fluctuations. Without a diversified investment portfolio and a solid understanding of risk management, your savings could be vulnerable to market downturns and investment losses. It's essential to strike a balance between saving and investing, ensuring that your financial strategy aligns with your risk tolerance, investment goals, and time horizon. Danger in saving 9. Rising education costs. Saving money for your children's education is a noble endeavor, but it may not be enough to cover the ever-increasing costs of higher education. With tuition fees, room and board, and other expenses on the rise, many families find themselves struggling to keep pace with the soaring costs of college and university. While saving early and regularly can certainly help alleviate some of the financial burden, it's crucial to explore other avenues such as scholarships, grants, and education savings accounts to ensure that your children have access to quality education without saddling them with crippling student loan debt. Danger in saving 10. Inadequate insurance coverage. While saving money is essential for financial security, it may not be sufficient to cover all potential risks without adequate insurance coverage. Whether it's health insurance, auto insurance, home insurance, or life insurance, having the right coverage in place can mean the difference between financial stability and ruin in the face of unexpected events. Without adequate insurance protection, your savings could be quickly depleted by medical bills, property damage, liability claims, or other unforeseen expenses. It's crucial to regularly review your insurance policies, assess your coverage needs, and make adjustments as necessary to ensure that you're adequately protected against life's uncertainties. Danger in saving 11. Economic downturns and recessionary pressures. Even the most diligent savers can find themselves vulnerable during economic downturns and recessions. While saving money provides a financial cushion, it may not be enough to withstand the full impact of a recession, particularly if you lose your job or experience a significant reduction in income. During times of economic uncertainty, savings can quickly dwindle as expenses mount and investment values decline. It's essential to have a contingency plan in place, such as an emergency fund or alternate income streams, to weather the storm and emerge financially intact when the economy rebounds. Danger in saving 12. Technological disruptions and skill obsolescence. In today's rapidly evolving digital landscape, technological disruptions can render certain skills or professions obsolete virtually overnight. While saving money is important, it may not be enough to protect against the risk of job loss or income instability resulting from technological advancements. To future-proof your career and financial security, it's essential to continuously update your skills, stay abreast of industry trends, and adapt to emerging technologies. Investing in education, training, and professional development can help ensure that you remain competitive in the job market and equipped to navigate technological disruptions effectively. Danger in saving 13 long-term care expenses. As we age, the need for long-term care becomes increasingly likely, whether due to illness, disability, or simply the natural process of aging. While saving money is important, it may not be sufficient to cover the significant costs associated with long-term care, such as nursing home fees or in-home caregiver expenses. Without adequate planning and insurance coverage, long-term care expenses can quickly deplete your savings and jeopardize your financial security. It's essential to explore options such as long-term care insurance, health savings accounts, or Medicaid planning to protect against the financial burden of long-term care in your later years. Danger in saving 14 global crises and systemic risks. In an interconnected world, global crises such as pandemics, natural disasters, or geopolitical conflicts can have far-reaching implications for financial markets and economies. While saving money provides a sense of security, during times of crisis, savings can quickly evaporate as job losses mount, investment values plummet, and economic uncertainty reigns. It's crucial to diversify your savings and investments, maintain a robust emergency fund, and stay informed about global events and trends to mitigate the risks posed by global crises and systemic shocks. Danger in saving 15. Taxation and regulatory changes. While saving money is essential for financial security, it's important to consider the impact of taxation and regulatory changes on your savings and investments. Tax laws and regulations can change over time, affecting the tax treatment of your savings accounts, investment income, and retirement accounts. Without proper tax planning and awareness of regulatory changes, your savings could be subject to higher taxes or penalties, reducing their overall effectiveness in achieving your financial goals. It's essential to stay informed about tax laws and regulations, work with a qualified tax advisor, and adjust your financial strategy accordingly to minimize the tax impact on your savings and investments. Danger in saving 16. Lifestyle inflation and changing needs. As your income grows and your lifestyle evolves, it's natural to experience lifestyle inflation, the tendency to increase spending as your income increases. While saving money is crucial for financial security, it may not be sufficient to counteract the effects of lifestyle inflation if your spending habits outpace your savings growth. Without careful budgeting and financial planning, you could find yourself living beyond your means, leaving little room for savings or future financial goals. It's essential to regularly reassess your spending habits, prioritize your financial goals, and make conscious choices to avoid falling into the trap of lifestyle inflation. Danger in saving 17. Legacy planning and wealth transfer. While saving money is important for your own financial security, it's also essential to consider your legacy and the transfer of wealth to future generations. Without proper estate planning and wealth management strategies, your savings could be subject to probate, taxes, or other legal complications. By taking proactive steps to plan for the future, you can create a lasting legacy that transcends generations and provides financial security for your loved ones. Time for the soft question. Saving money under a mattress or in a bank gives us the same results. What are your plans to mitigate inflationary and other risk factors when it comes to your finances? Please share your thoughts and experiences in the comments section below. This may help our viewers learn, grow, and hopefully benefit from it. Thank you for sharing. Subscribe with us and learn. If you find the information in this video valuable, please subscribe to watch more videos like this and also share it with family and friends. Your support will help us create many more high-quality videos like this. Please hit the like button and the notification bell to be notified. There's more waiting to be learned in our next video. Please click on these 2 videos shown here to explore even more. The contents of this video are for educational and informational purposes only. Thank you for watching.